Hello and welcome. You're watching this newest edition of What's Hot on our channel Business Today Television. I'm Sakshi Batra and this is where we are going to be discussing what's truly buzzing on D Street. And what's buzzing is the IPO market. That's the initial public offering market. A lot of companies that are lining up and queuing up to get themselves listed on the stock market exchanges. We've already begun the month of November with a bang. It's the third session already and we are already seeing that the Lenskart IPO is on day 3. We have a Groww IPO that's open today. We have Pine Labs IPO that will be opening on November 7. And in all, over ₹1 lakh crore of funds are waiting to be raised by IPOs all of November. Already in the month of October, we have seen record fundraising coming in, the busiest month for IPOs after September as well. So the IPO rush continues on D Street. And what we are going to be understanding is on this show what is up for grabs for all of you right now. What is it that you should keep in your mind when we are looking forward to some opportunities in the IPO market? Let's welcome our guests on board. We have Mr. Dharmesh Kant, who's joining in and from Chola Investments on this program to help us understand the IPO market and the opportunities there. Warm welcome. Good morning to you, Dharmesh ji. Good to have you with us. Let's also welcome my colleague Pawan Nahar, who's actually done a lot of deep research on this IPO space to help you understand what exactly are the brokerages saying, what exactly is the current stance in the grey market, and everything that you really need to understand about the IPOs that are open on D Street. Dharmesh ji, first up to you. Is it making life a little more difficult to really find out where should clients be putting in their money? Secondary market, which is consolidating, but probably giving better valuations at this point in time with all those stocks that have not moved too much in the last 1 year? Or do you look at these newer opportunities where the subscription figures are already high? You're looking the anchor books also of so many IPOs getting over many times, multi-time subscription as well. That only gives us to understand that so much liquidity waiting to be coming into the stock markets. How are you looking at this mega IPO rush?
Yeah, good morning, Sakshi. Thanks for inviting me for the show. See, Sakshi, life is not difficult. I mean, it's very easy. It depends upon how you are looking at things. Liquidity is very high in the market, and too much money is waiting on sidelines to be deployed in the Indian equity market, both domestic as well as international. And that's the reason why we are seeing such a frenzy at frenzied valuations, getting oversubscribed 3, 4, 5 times. And anchor book, in fact, the institutions have been more bullish on the Indian IPO scene than the domestic investors themselves. So if you look at retail subscription, they have been okay types, but as far as FIIs or the anchor books are concerned, they are more bullish. And again, the reason is the same, because most of the DIAs as well are sitting on large kind of a cash surplus with them. And anchor book is one route where this can be deployed into the market. So, I mean, it's your pick and choose. If you are looking for listing gains, you may still get. But if you are looking at a long-term gain, then you have to be very selective on the space and which company you are investing in. So, our case has been most of the IPOs. I mean, this year, 4 or 5 IPOs, we did not have a subscribe rating, and they did not do well even on the listing day. So one has to be careful, but there are some fancy names and they can still give you a few days of a listing gain, and then again there can be a downside. So there are plenty of case studies to look into that. My only plea is please look out for your window of horizon. If it's just a 1 or 2 day kind of game, you may still get away. But if you want to be a meaningful wealth creator from that, then you have to be very selective.
Very selective. That's the key, viewers. Of course, we will see many IPOs coming in, but you have to be very selective and choosy about the stocks that will actually suit your portfolio and your own goals as well. Let me welcome Pawan Nahar also joining in. Pawan, first give us an overview of what's really open at this point in time for all our viewers to see as opportunities. We have Lenskart day 3. Already we had seen on day 1 full subscription happening, 2-time subscription yesterday. What's the kind of status that we are seeing today? And already on the grey market premium, we are seeing some declines at this point. What does that point out to? And give us a sense of Groww. What are the top brokerages also saying there? Are you on mute by any chance, Pawan?
which was very criticized on social media as well, for the promoters buying shares at 52 and then offloading just after 2 months at 402 rupees. The issue has managed to get a decent response from the investors in the first 2 days. It has got a 2 times subscription, but the valuation still remains a very big concern for the investors, and we have to see that how the issue will pan out today, because it's just 5, and the bidding has kicked off at 10. So we have to see that how the issue is going. But interestingly, brokerage firms, all those who have given us a subscription rating, they have suggested to subscribe it for long term only,
Yeah.
including ICICI Direct, Anand Rathi, Arihant Capital, Swastika. They all have suggested to subscribe to it. But Chola Securities and BP Equities, they have suggested an avoid it rating, citing the valuation concerns behind this IPO, because they believe that this is very much overvalued for the investors.
Okay, in fact, let me go across to Dharmesh on that one. Lenskart, clear a void for you. Why is that? Could you list out the reasons for all our viewers?
Yes, actually, one is Lenskart is not a new concept. I mean, it's totally entrenched into nook and corner of India. So the business, I mean, if they are saying that they will get a deeper penetration or larger market share, I don't think that is the scenario, because if you look at last 2 years growth on the top line, so FY24 they ended with 40 plus kind of top line growth. FY25 they ended with 23% kind of a top line growth, which is decelerating in the domestic scenario. Overseas definitely they are foreign, and that is what they are holding out as a carrot, that's the market they will be tapping. But our sense is with margins will now get restricted, and top line growth would be anywhere between say 15 to 18%. Not beyond that, it would be a normalized kind of a top line growth. And there you are asking a valuation of 10 times the sales and 230 times the PE multiple, which is too high asking rate, even if it means billing out your investors who are there in the system. So the pricing is one point which we think is ridiculously high. And secondly, the business will be now business as usual, like most of the product plays. So it's just they're selling specs with power on. So it's nothing new age kind of a concept. They are citing that, but only thing, if you are selling online and you call yourself a new age, which I don't buy. So that's the reason why we are recommending avoid completely on this IPO.
Okay, got that. Let me move on to the next one then, and that one is Groww IPO that's actually opened today, and therefore more interest from investors to start looking at that one. Pawan, give us the key details here and what are top brokerages saying on Groww IPO. Is this an opportunity that all the investors should be looking at? After all, Groww, which deals in the stock markets, is now going to be checking its own strength on D Street.
Today, and it will close for subscription on Friday, November 7th, and it is looking to raise 6,632 crore from the primary market investors, offering its shares for rupees in the price band of 95 to 100 with a lot size of 150 equity shares. Interestingly, all the new age company IPOs, they have a retail portion of only 10%, and Groww is among them as well. It is a fintech company. We are all aware that it provides a digital platform, investment platform for retail investors to for mutual funds, broking services, and other investments. And majority of the brokerage firms, including Arihant Capital, Swastika, Investmart, Anand Rathi, BP Equities, SBI Securities, Ventura, Smiths, they all have suggested to subscribe to it. But I would say Dharmesh sir is very strict teacher. His broking firm, Chola Securities, they have a neutral rating, and they have given a very interesting observation that Groww does not have any major moat. They don't have any major moat for which makes their business different from other peers, and they have a threat from Zerodha, Upstocks, and other discount broking firms which can replicate their business model and challenge their market leadership position.
Okay, Dharmeshji, coming to you then. Our colleague here thinks that you are very strict when it comes to the IPO space, and you rightly pointed that out. It is, a space that to be cautious about. We've been seeing lofty valuations that can get a lot of retail investors who are just starting out to get trapped in many situations too. To avoid it, you are being very, very careful, and that's of course the right fashion in which one has to look at the stock market markets and the opportunities. But Groww IPO, they're looking at how the investors base in retail space is expected to nearly double over the next few years or so, and the kind of digital footprint that Groww is betting big on at this point in time, and the fresh and new investors who are more digital savvy are looking at these newer companies rather than the traditional AMC's broking houses at this point in time. How are you looking at the key points that will make you cautious on this one too?
Yeah, well, thank you so much for the compliment. See, it's like, I mean, nothing wrong with the company itself. They have been doing business very well and they have been getting market share and grabbing market share, but no questions asked there. My only point is the valuation is around 25-30% higher than the peer group. And this doubling of the market share, I buy that. There is again no second thought on that. But this market is open for everybody. So players who are already into this business, be it Zerodha, Upstock, Motilal Oswal, ICICI Securities, they all be also looking for the same market share, and technology is something which can be replicated immediately. I mean, Zerodha and all, they replicated technology which was there in the West, US and I mean London. When that technology was not there in India, they replicated that and they got the benefit of that going into this space. So there is no business moat. Anybody with muscle power of finance and private equity or virtual capital funding can immediately do that. So that is one thing. Secondly, as far as Groww is concerned or this discount brokers are concerned, they are totally retail focused business. So retail is very much fluctuating kind of a business, depends on the market movement. Any one dull year in the market will have the retail volumes sinking down, and there the diversification is not that great. Though they are offering third party distribution of mutual fund and all, but again if the SEBI rule comes into play, then the distribution income will be under scanner in a much big way. So I think there are plenty of cautionary yellow flags out there which do suggest that higher valuation multiple may not be sustainable over a longer period of time. I do believe on listing there would be definitely some gains because it's priced 95 to 100 rupees. So such kind of pricing often attracts 15, 20 or 30% kind of a listing day gain. But beyond that, it will be more of a normalization kind of a stock price movement. And that's the reason why we have a neutral rating on the stock. If somebody wants to invest for a long term and is betting on Groww, they may still do so. But again, the returns will be in line with other marketplace in the space.
Okay, moving on to the third one that will of course open pretty soon for all the viewers is the Pine Labs IPO as well. So for those also who are looking at what is on offer, let's go across to Pawan for all the details of pricing, the dates, and of course the kind of allotment you could be looking at there. What is the exact detail that one should be watching out for here on Pine Labs, Pawan?
So Sakshi, Pine Labs IPO, which will open on Friday, November 7th, and it will close for subscription on next Tuesday, November 11th. So the company is looking to raise somewhere around 3,900 odd crore rupees, which is a mix of fresh share sale of 2,080 crores and offer for sale of 1,820 crores. And this IPO is taking the entire these three IPOs fundraising to 17,810 crores. Pine Labs will be selling its shares in the range of 210 to 221 rupees with a lot size of 67 equity shares. Retail investors, they have only 10% allocation in this IPO. Pine Labs provides point of sale solutions, payment processing, merchant financing services. We all know that on a number of retail merchandisers, they have the Pine Labs machines for the payment. So they are providing those services, and it is backed by global giants like PayPal and others. So yes, but interestingly, they also have cut their valuation in the DRHP. They were seeking a valuation of somewhere around $26 billion, and now their valuation is somewhere around $20 billion. So yes, they also have taken a 20% of valuation cut, and I have a report from SBI Securities which has suggested to subscribe to it for a long-term gain on a long-term basis. But we have to see what other brokerage firms also say about this IPO.
Absolutely. Let's go to Dharmeshji. Dharmeshji, Pine Labs, is that looking interesting to you at all at this point in time? The price band of 210 to 221. How are the valuations placed at this point in time? And within this entire competitive space that everybody is scouting for market share in, how would you look at Pine Lab?
My comment on Pine Labs because the report is likely to be released today itself, and we are
Okay.
working on the numbers and the fine prints and the final details of it. But as you said, the space is very competitive, be it Paytm or Razorpay, PhonePe, all are vying for the same market, and the entire model for all these fintech players are the same. So competition is there. The only argument which the management has put up that the market itself is going in such a big fashion that there's a space for everyone, and you need multiple players to cater such kind of a volume growth. Otherwise, your systems may not afford such kind of heavy transactions coming into play. So that's well taken. I mean, that is definitely there, and Pawan pointed out that they have cut down their valuations as well. So, but allow me a day. I mean, by today's evening, the report should be out, and then we can discuss it later.
Okay, so from the other two, Groww and Lenskart, would you continue to stay away and look for better opportunities? Is that a clear view?
Yeah, definitely. I mean, Lenskart, I will wait for a long time. I will like to wait for a year or so before taking a call on that. But as far as Grow is concerned, I mean, we'll wait for 2 more quarters to play out, and then we'll see how their numbers are stacking up compared to the competition.
Okay, this month of November also has a lot of further opportunities that we would be looking at. What we are given to understand from reports is that about 1 lakh crore rupees could be looked at being raised in this month, and that could be another record for this monthly move that we could be expecting. Not just the ones that are in opportunity that we are seeing right now. We have also some other names like PhonePe that could be coming in, Physics Wala could be coming in, Credila, Dorf Ketal. We have a lot of names that could be coming in there. Anyone, Dharmeshji, that you are particularly excited about?
Yeah, physics Wala is one where we are particularly excited about. I think it's a very interesting play. And again, it's more of a domain specific, person specific kind of a play. The entire setup has been done by few people only, and there the moat lies. But I will like to have a look at the valuation multiples. What is the kind of valuation they are, commanding it, and having light that this is more from the education department. None of the previous, listing plays or IPOs from the same space has done well into the market. So maybe this time this can turn things around. But let's see. I mean, first is the valuation thing, and then how the guidance is on the future trajectory and growth opportunities which they are aiming at. So, but definitely, this is one where we are positively looking at.
Okay, fair point. Dharmeshji, at this very point, let's actually delve a little deeper for all our viewers to understand what are the key metrics that you look at when you select IPOs, and how should one be really identifying for themselves? Are there 2 or 3 parameters that are paramount that one should definitely keep in mind and that makes the decision better rather than just going with the name, marquee, parentage, or the kind of opportunities that we are seeing? What are the things that one has to go if there's a retail investor who has so many of options coming in? What are the 2 or 3 parameters that definitely will help this decision make easier?
Exactly, the first parameter is the type of business they are into. They may label it anything. I mean, they may label it new age and things like that. But is it actually a new age? What to my mind, when Paytm came, it was definitely a new age kind of a business. The entire this payment model was nowhere in the world, and they were the ones to start with. So that is first parameter. Second is I always look at to the PEG ratio. So whatever is the valuation multiple as of now, no problem. But is the profitability growth in the coming future for next 2 3 years is more than what the valuation which is being offered on the table. So if the PEG ratio is less than one, again, even if it is 100 P multiple, it does merit a buy. So no problem out there. And the third is, I mean, the story behind is it a normal run of the mill kind of a business like Groww? For example, it's a normal broking business, and the same product folios are being offered on the table. There is no demarcation on the product profile per se. How they are being, only thing is seamless transaction, ease of getting the product is where the differentiating factor is. So business support is the third factor which we look forward to, whether it is there or not. If all three qualifies, I mean, the business mode is there, the PEG ratio is less than 1 and the concept is novel, then higher valuation multiples are also warranted. Otherwise, you should leave something on the table. For example, LG Electronics. It was a very good and nicely priced kind of an IPO, which left much on the table for the investors to take away from. I mean, they are the ones who are supplier to most of the B2C players in the Indian market as far as the compressors are concerned. Still, they were 50% lower than the peer group of, say, Voltas, Whirlpool, Blue Star and all. So, that kind of offering is against good. I mean, Hyundai also came out with a good IPO pricing at that point of time. So, if you are run of the mill, then come out with, leave something on the table for investors to take away from, because you are coming for an IPO. And secondary market, if you are good enough, secondary market will reward you suitably. Otherwise, you should have a business mode, lower, PEG ratio, and a nice niche opportunity.
Fantastic. All right. Thank you so much, then, Dharmesh ji, and thank you, Pawan, for being with us on the show. Dharmesh ji, you've clearly given, quick masterclass on the IPO space as well. So thanks a lot for that. This, I'm sure, will really help a lot of viewers pen down for themselves to go and ensure that this checklist is there whenever you go ahead and check for the newer opportunities that are coming in. Pawan, thank you so much for all those details on this IPO. It's going to be a busy week for you, of course, and we're going to be troubling you much more to get us all those details and developments on that front. Thank you so much to both of you for being with us on this special edition of What's Hot. Viewers, we'll wrap up What's Hot right here, but do stay tuned as the market coverage continues on the other hand. And of course, if you have any questions regarding the stocks in your portfolio, ask them away on daily calls at 12 noon. I'll be back for that.